Markets responded positively to Spain's budget and reform plans as the S&P 500 broke a 5-day losing streak. Risk appetite carried on in the Asian session and sent most Asian indices higher. Spanish benchmark 10-year yield also dipped below the 6% level. European majors and commodity currencies strengthened against the dollar. A detailed schedule on economic reforms was announced in Spain overnight. The plan featured a 8.9% cut in government spending in 2013. Meanwhile, an increase in sales tax is expected to raise tax income by €5 billion to €175 billion. Also, a new independent budgetary authority would be established to monitor government spending. The overall target on deficit to GDP ratio would be 4.5% compared to 2012's 6.3%. Deputy Prime Minister Soraya Sáenz de Santamaría emphasized that this is a crisis budget aimed at emerging from the crisis. The EU Commissioner for Economic and Monetary Affairs, Olli Rehn, hailed that the reforms are clearly targeted at some of the most pressing policy challenges. Also, Rehn said that the plan responds to country-specific recommendations and goes even beyond them in some areas. However, some economists are skeptical, as the plan is focused on cutting spending rather than increasing revenue. And at the risk of a deeper recession in the country, further cuts would be needed. Meanwhile, authorities remained silent on the issue of a sovereign bailout for the country. Greece's coalition government also agreed a plan to cut spending over the next 2 years by €11.5 billion. Finance Minister Yanis Tournaras said that the agreement gives a basis for stronger negotiation with the international creditor for easing the conditions on fiscal reforms. PASOK's leader Evangelos Venizelos said that the European parts are undoubtedly aiding Greece but not as much as they could, and he urged European leaders to acknowledge the achievements of the Greek people, as shown in the elections. Greece has yet to secure the next tranche of the bailout fund from the EU and IMF, with Prime Minister Antonis Samaras seeking a 2-year extension on fiscal reforms. Tournaras will meet with the Troika again on October 1st. The technical development argues that the pullback in European majors against the dollar is possibly over. That is, Euro-US dollar has successfully defended the mentioned 1.2816 cluster support level as expected. The main focus for today will be on 1.2970 minor resistance in Euro-US dollar, 1.6300 in sterling US dollar and 0.9327 minor support in US dollar Swiss franc. We anticipate these levels to be taken out later today or on Monday. Meanwhile, the 0.9731 support in US dollar Canadian dollar and the 1.0518 resistance in Aussie dollar US dollar should be watched closely too. On the data front, New Zealand building permits rose 1.9% month-on-month in August. UK GfK consumer sentiment improved slightly to -28 in September. In Japan, PMI manufacturing improved to 48 in September but stayed below 50. In August, unemployment rate dropped slightly to 4.2%. National KPI core dropped -0.3 year-on-year. Household spending rose 1.8% year-on-year. Retail sales rose 1.8% year-on-year and industrial production dropped -1.3% month-on-month. German retail sales, Swiss KOF and Eurozone CPI flash will be the main features in the European session. And Canadian GDP and US personal income and spending, Chicago PM * and University of Michigan sentiment will be released in the US session.